Hello, my name is Robert McDonald and I'm the founder of Gain DAO. And today I'm going to talk to you a little bit about the pool manager role inside of the Gain DAO ecosystem. Now, the pool manager is probably the most important thing inside of our ecosystem because it's actually what's generating the yield for our tokenized pools. Meaning that Gain DAO, we don't loan out your crypto to generate a yield. We don't have some kind of an inflation mechanism. Basically, all of the returns that are generated inside of our ecosystem are done so through trading. And that is handled by the pool manager. So I'm looking at the website right now and I'm going to scroll down, and there's four major components of our ecosystem. The first is selecting a pool. Now, when you're picking your pool, you're going to want to say, would I like returns in Bitcoin, Ethereum, or USD? After that, let's say you want to join the Ethereum pool, you're going to want to tokenize. Now, tokenize is the process of actually taking your Ether, converting it into Gain tokens through the distribution contract. And then that Ether is then sent off to our regulated brokers. And that's where the pool manager's job comes into play, because their job is to actually go and trade in order to grow the size of that pool. So the users holding Gain tokens, and that's a share of the pool itself. So the Gain token is a share of the Ethereum pool. And as long as you're holding those Gain tokens, you have a share of that pool. And if the pool manager is successfully trading and growing that pool, when you want to go and redeem those Gain tokens for Ether, you're going to receive more Ether than what you originally put in. And that's where the yield comes from. So as an example, someone puts in 10 Ethereum, they tokenize, they're holding Gain tokens, and at a time of their choosing, they can harvest those Gain tokens or sell them on the open market. But generally speaking, harvesting is best, just because those Gain tokens are then permanently burnt. And it's a way for you to interact with the ecosystem and not have to go on the open market and dump your Gain tokens. You can just have it swapped out. So basically, your Gain tokens will go into the harvesting contract. The harvesting contract will pull Ethereum out of the pool, the Ethereum pool, and you'll be getting Ether, and your Gain tokens are then burnt. So that's, in a nutshell, the entire Gain DAO ecosystem. And the pool managers are basically at the most critical portion of all this, because with Gain DAO, we're not loaning out your crypto. We're not inflating the amount of crypto somehow. There's only a few different ways that you can generate yield in cryptocurrencies. Usually it's through either inflation or it's from some form of loaning. But loaning is something that I would consider not very transparent if it's handled by a centralized entity. If it's fully decentralized, then I think there are some loaning protocols that are fantastic. The yield isn't very high, but at least it's transparent. With centralized entities, usually they get into trouble because they're loaning into riskier and riskier things, and pretty soon the amount of yield that you're getting for the risk that you're assuming, since they're not opening up their books, they're not audited, there's no way to find out exactly what they're doing to get that yield. It exposes you to a lot more risk than I would consider safe. Now, how do people know that our pool managers are actually trading and know what they're doing? Well, first off, our very first pool manager was started about 2 years ago and had an objective to make 3 to 5% monthly returns and have a drawdown of 20%. So that was the goal, 20% max drawdown, which is actually less than the S&P 500, so not too volatile, but also generating a very attractive return of 3 to 5%, which is not easy to do. If you ask any professional trader how they feel about 3 to 5% a month, they're going to say it's not easy. It's definitely not easy. So, but those were objectives. And if you click on this widget, this goes to our auditor, and it's going to go ahead and pull up our beta account. Now, our beta account was a smaller account that we established just to be able to see and prove more than anything that it is possible to consistently generate returns and limit risk. This is connected to a Forex or currency broker called International Capital Markets, or IC Markets. So the account is inside of IC Markets. It's trading traditional currencies, and the pool manager is doing this by means of algorithmic trading. So they've been trading for over 2 years now. The monthly return has been 5.74% on average. Maximum drawdown 21.49%. So they've stayed pretty close to the parameters that we set out in the beginning. And if you actually scroll down here, you can actually see what instruments were traded in order to generate that yield. And if you notice, it's all traditional currencies: NZD CAD, US dollar CAD, Great British Pound, US dollar, Euro Pound. These are all traditional currencies. Now, what the broker is doing with our pools that's different is that, let's say you're in the Ethereum pool, the broker will actually go and convert the profit and loss of these trades in the traditional currency market into Ether. So the amount of Ether is what's actually being grown, not the amount of US dollars. In this case, this account is a US dollar account. But this, like I said, is our beta and was more a proof of concept. Now, this is our actual Ethereum account. So this is held with another Forex broker, but the base currency, as you can see, is not US dollars. It's actually something called EBC. Now, TradeView Markets is the broker, and basically what TradeView has done is that the pool is held in Ether, but when we're actually trading, it's actually trading traditional financial instruments, but all profit and loss is settled in Ether. So the amount of Ether actually grows, and that's what's represented as EBC. And the way this broker has things set up is 10,000 EBC equals 1 Ether. So the performance has been very similar to our beta account. It's 5.67% monthly growth, max drawdown 7%, and a total growth of 22.47%. It has much less time trading, but so far it's reached the objectives that we're looking to do of 3 to 5%. And this was last updated 1 hour ago. So one really important aspect, and something that everyone should ask themselves if anyone approaches or says, hey, we can generate a yield, how? How is that yield being generated? Exactly how, and can you prove it? Those are the things that you need to ask. And with Gain, since we are using MyFX to actually look into our trading count, and actually several times a day it's updating the statistics, it has a level of transparency that I don't think any other yield generating platform is offering, besides perhaps something like Compound or Aave, which is fully decentralized. Of course, the yield is much, much less, but with our model, which is hybrid finance, we're able to leverage the scalability of traditional financial services and brokers, like currency brokers. The currency market itself is huge. There's tons of volume, very scalable, regulated brokers holding the funds. So there is a lot of advantage with using the traditional financial model or traditional financial system, but then again, having the return being in something that is scarce like Ether or Bitcoin. So running back over to the website, the beta account is right here, so people can have an idea of what to expect. As you can see, there is dips on the road. It's not a straight line to success, but then again, that's trading. Good trading. A quality trader knows when to cut losses. Their strategies are mostly built around probabilities. It's not something to where it's going to keep risking itself. Basically, it cuts losses if it has a bad day trading, and then goes at it the next day and tries to make some profit. And so that's I would say a summary of what the pool manager does for Gain DAO. It's a role that's democratically elected, and I would see Gain DAO in the future having several different pool managers, not just one pool manager, but several different pool managers working across different markets Currently, our pool managers using the traditional currency markets in order to generate a yield, but this is also applicable in trading crypto assets. It could also be in equities, commodities, pretty much anything that the broker can settle in the base currency. So if we're dealing with a broker and they can settle in Ether, then they would be a candidate, or that broker would be a candidate for a pool manager. So if you have any questions, feel free to write in the comments, and I'll try to get back to you and answer your questions for you. Also, you can write us at hi@gaindao.io.